Welcome back to the Pro Ticker Podcast, everyone, your Tuesday morning edition covering major financial magazine headlines.
It is Tuesday, isn't it?
It is Tuesday.
All right, good.
And wow, what a start to the week.
Yeah. We say that every week, but this week,
Yeah, this one
it really feels like it.
feels like it a little bit.
A lot going on.
Yeah, there's some significant movement in the markets and some economic signals that have people, I think, scratching their heads
Absolutely.
a little bit.
Yeah, you could feel the tension out there.
So we are going to do a deep dive this morning, as we always do on Tuesdays, into these headlines
Absolutely.
and kind of try to make sense of it all.
Right.
And we are looking at the Wall Street Journal and Bloomberg News this morning.
Two of our
Favorites.
always go to.
And it seems like the big themes here are the U.S. stock market turmoil.
Yeah.
Which we are all feeling, I think, a little bit. And then kind of globally what's happening with investor sentiment. Where are people putting their money?
Absolutely.
And then this question of the American consumer, how strong and resilient is that consumer?
Right. Are we maxed out?
Yeah, we're maxed out.
Right. Have we hit that tipping point yet, or
Yeah.
is there still some gas in the tank?
So I think the place to start is the U.S. stock market.
Okay.
And Monday was not a great day
Not a good day, no.
for a lot of folks.
The Wall Street Journal was highlighting the NASDAQ's worst day since 2022,
Okay.
down 4%.
Yeah, it was down a lot.
That's a big drop.
And it seemed like, Tesla especially was
Yeah.
really taking a hit.
Yeah, they were down big, over 15%
Yeah.
for Tesla,
That's a lot.
which is really, kind of a bellwether for
Yeah.
the tech sector.
In the tech sector in general, it was kind of those magnificent seven, right, that were
Right.
leading
Always.
the decline.
Yeah.
Yeah. And it just seems like there is concern over interest rates rising.
Mm.
And you know what that's going to do to future tech earnings.
Yeah, if those interest rates keep going up, that really hurts those growth stocks like tech.
Yeah, it really does.
Especially.
And it wasn't just tech, though, right?
No, this was a pretty broad sell-off.
Yeah.
The S&P 500 was down 2.7%.
Okay.
The Dow was down nearly 900 points.
Wow.
So yeah, this was not
Darn.
isolated to just one sector.
A bad day.
It was a bad day.
And there's this, we talk about the markets and investor sentiment, and there are these signals out there. And one of the things that the Wall Street Journal pointed to was the VIX,
Right, the fear index.
the fear index.
Yeah.
And it jumped to its highest level since August.
Yeah, and what that basically tells us is that investors are getting nervous.
Okay.
And they are buying insurance in the form of options contracts,
Okay.
which, pushes that index higher.
So it's interesting because we're seeing this play out on multiple levels.
Right.
We're seeing the major indexes drop. We're seeing, the VIX go up.
Yeah.
And then we're also seeing this from the analyst perspective too, right?
Yeah,
like Citigroup downgrading U.S. stocks.
Yeah. Yeah, this was from MarketWatch. They were reporting that Citigroup had downgraded U.S. stocks to neutral from overweight,
Okay.
which, is essentially a sign that they are less bullish on the U.S. market.
Yeah, and I think, it's always important to clarify for our listeners, when they use those terms, overweight, neutral, underweight,
Right.
what exactly are they talking about?
So overweight in this case means they were recommending that investors hold more U.S. stocks than their benchmark.
Okay.
And neutral means basically, a more balanced approach.
Okay.
Not necessarily bearish,
Right.
but not as bullish as they were.
And their reasons for this downgrade were pretty interesting.
Yeah, they cited the S&P 500 breaking below its 200-day moving average,
Okay.
which is often seen as a sign that a longer-term upward trend might be losing steam.
Okay.
And they also pointed to the weakening performance of those big tech stocks that we were talking about earlier.
Okay, so they're seeing some signals there.
Absolutely.
But it's not all doom and gloom, right?
No, I mean, MarketWatch also pointed out that breaking that 200-day moving average might not be as bearish a signal as it used to be.
Oh, really?
The rise of ETFs has made trading on these technical signals much more common.
Okay.
So a lot of times, the move below the average can trigger a lot of selling simply because it's a well-watched level,
Okay.
not necessarily because of a fundamental shift in the underlying companies.
So it's almost like a self-fulfilling prophecy in a way.
Right.
Yeah.
Like, everyone's watching that level.
Yeah.
And as soon as it breaks below it, they all jump in
Everyone starts selling.
and start selling.
Yeah, that's really interesting.
Yeah, so it might not be as bearish a signal as it once was.
Oh, okay. So we have, Citigroup saying, okay, we're downgrading U.S. stocks.
Right.
But then we also have, People like Tom Lee
Right.
from Fundstrat who's saying, you know what, I think Monday's drop was an overreaction.
Yeah, he actually thinks it was a buying opportunity.
And what were some of his
Yeah. Well, he pointed to a few
reasons for that?
things coming up that could be market stabilizers.
Okay.
Trump is speaking to the Business Roundtable this week.
Okay.
We're going to get some data on job openings.
Okay.
We're going to get CPI and PPI numbers, which are key measures of inflation.
Right, inflation is
And we've got the government
to everyone's mind.
funding deadline looming.
Right. Yeah.
So he thinks all of these events could provide more clarity
Okay.
and potentially calm the markets.
So some potential turning points coming up?
Potentially, yeah. And he also thinks there's an increased probability of a May rate cut
Oh, really?
by the Federal Reserve,
Okay, so that would be,
which could be a game changer.
yeah, it seems like everyone is kind of, the Fed's going to raise rates, they're going to keep them steady,
Right.
maybe they'll cut rates. No one's really sure
Nobody knows.
what's going to happen.
Which is, part of the problem.
Exactly. Yeah, and, it's interesting because it's not just the markets that are sending mixed signals. It's the economy in general. We've got, the Commerce Secretary, Howard Lutnick.
Yeah.
He's saying no recession in America.
Right. Very optimistic.
Very optimistic.
It's good.
But then you have President Trump saying, well, there might be a period of transition,
Right.
which sounds a little more cautious.
Yeah, a little bit more measured for sure.
Yeah. And then you've got, economists at places like J.P. Morgan and Goldman Sachs
Yeah.
who have actually increased their probability of a recession.
Yeah. The odds are going up.
So it's like, who do you listen to?
Right. Who do you believe?
It's all over the place.
Well, and that's the thing about economics, right?
Yeah.
It's not an exact science.
No.
There's a lot of uncertainty.
And it seems like even if there's not a recession, these fears about a potential recession
Yeah.
are already having an impact on certain parts of the market.
Yeah, for sure.
We saw some pretty significant declines in those retail brokerage stocks, like Robinhood Interactive Brokers, Charles Schwab.
Yeah. MarketWatch was pointing out that some of these stocks saw their largest drops in years.
Wow.
And, that makes sense if you think about it. Retail brokerages, they thrive when markets are doing well.
Yeah.
People are optimistic.
Everyone's trading.
They're trading a lot.
Yeah.
But when there's fear of a downturn,
Yeah.
or even just increased volatility,
Yeah.
retail investors, they tend to get a little more cautious.
Right. They pull back.
They pull back, they trade less, they hold on to their cash.
Right.
And that directly impacts the revenue of these brokerages,
Yeah, that makes sense.
which, a lot of times rely on transaction fees
Yeah.
and interest income from customer accounts.
And it seems like Robinhood in particular
Yeah.
was hit pretty hard.
He got kind of a double whammy.
Yeah.
MarketWatch was reporting that they weren't included in the S&P 500
Yeah.
after the recent rebalancing.
Even though they seemingly met the criteria.
Yeah, which, was kind of a surprise.
So just not a good day for Robinhood.
Not a good day for Rob.
So, okay, the U.S. market, a lot of uncertainty there, some mixed signals about the economy. But I think one of the things that's really fascinating is what's happening globally right now.
Yeah, the global picture is really interesting right now.
And the headlines seem to suggest that there's this real shift in investor sentiment.
Right. People are looking for opportunities outside of the U.S.,
Yeah.
which is a big change.
And we're seeing that play out in a couple different ways.
Yeah.
One is that Canadian stocks are really outperforming U.S. stocks.
Yeah.
And that's according to Bloomberg.
That's right. Bloomberg was saying that the S&P TSX Composite Index has seen a much smaller decline year to date compared to the S&P 500.
Okay, so they're holding up
Yeah, they're doing better.
better than us.
And if this trend continues, it could be the third straight quarter
Oh.
of Canadian outperformance.
Okay, so this is not just a blip.
No, this seems to be a bit of a trend.
Yeah, and they pointed to a couple of reasons for this. One is that the Canadian markets are getting some support from their copper and gold mining sectors.
Right. And gold in particular is seen as a safe haven
Yeah.
during times of market turbulence.
Right, so when people get nervous,
They buy gold.
they run to gold.
Exactly.
Yeah, and the other interesting thing is that current profit growth expectations for Canadian companies are actually higher than those for U.S. companies.
Yeah, and that's a big factor for investors.
Right.
They want to see growth.
And then there's this whole thing about, Trump and his tariff threats.
Right, and that's a big one.
And that seems to be weighing more heavily on U.S. stocks
Absolutely.
than Canadian stocks.
Yeah, Bloomberg intelligence strategists were suggesting that those tariffs are a bigger concern for U.S. companies.
Yeah, and it makes sense, right?
Yeah, I mean,
Yeah.
if you're a company that does a lot of business with China,
Right.
those tariffs are going to hurt.
They're going to have a real impact. So it's not surprising that investors are maybe looking to Canada as a little bit of a safer haven.
Right, a little bit more stability,
Yeah.
a little bit less exposure.
Yeah. And then the other really interesting shift is towards China.
Yeah, this is a big one.
We were talking about, Citigroup downgrading U.S. stocks,
Right.
but they're actually upgrading Chinese stocks
To overweight.
to overweight,
Yeah.
which is kind of a bold move.
It is a bold move, considering all the concerns
Right.
about the Chinese economy and the regulatory environment.
Yeah, but they seem to have some pretty compelling reasons for doing it.
Yeah, they're really emphasizing the technological advancements being made by companies like DeepSeek,
Okay.
which is a sign that China is still at the forefront of certain tech sectors,
Yeah.
despite all the export controls.
And then there's also, Xi Jinping seems to be signaling some support for the tech sector.
Yeah, he wants to see those companies succeed.
And I guess the proof is in the pudding, right?
Yeah. Right. The Hang Seng China Enterprises Index and the Hang Seng Tech Index are both up significantly this year.
Okay, so the market seems to be responding.
Yeah, there's definitely some positive momentum there.
It's interesting how quickly sentiment can change.
Yeah. Investors are always looking for the next big thing.
And right now it seems like they're seeing some potential in China.
Right. And it's not just equities either.
Oh.
Bloomberg was also highlighting a trend of traders seeking hedges outside of U.S. dollar-denominated assets.
Okay.
So they're moving into things like the Japanese yen, the euro, Australian government bonds
Okay.
as perceived safe havens.
So it seems like the U.S. dollar is maybe losing a little bit of its luster.
Maybe. Yeah, there's a sense that the period of U.S. exceptionalism in global markets might be coming to an end.
And we're seeing that play out in the currency markets too, right?
Yeah, the euro has jumped.
Okay.
And we're also seeing strength in Chinese stocks listed in Hong Kong.
So it's a real global reshuffling happening right now.
Yeah, a lot of moving parts.
And this isn't just, small investors. We're talking about, we're seeing strategists at big institutions like Citigroup and HSBC
Right.
downgrading their outlook on U.S. equities
Yeah.
and favoring European equities.
Yep. Bloomberg was reporting that.
So the big money is moving too.
Yeah, they're seeing the same trends.
And then you have things like, geopolitical events
Right.
that are also having an impact. Bloomberg was pointing to Germany's recent announcement about increasing defense spending
Uh-huh.
and how that's actually having a positive impact on the euro.
And potentially the Swedish krona.
So it's all connected.
Yeah, everything's connected.
Yeah, it really is.
It's a global market.
But so we've talked about, the stock market. We've talked about what's happening globally. But I think one of the big questions that everyone has right now is, what about the American consumer?
Right.
How strong is that consumer? Are they going to be able to keep spending and driving the economy?
Yeah, are we maxed out?
Yeah. Are we maxed out?
That's the big question.
And there are some signs that maybe we are starting to see some cracks in that foundation.
Yeah. The Wall Street Journal was reporting a big downturn in the stock prices of those consumer lending companies,
Okay.
like American Express, Capital One, Discover Synchrony,
Right, the big names.
the big names.
And that's being driven by fears of a recession.
And also concerns that consumers might be hitting their borrowing limits.
Yeah, that they're maxed out on credit.
Exactly.
And that, all that spending that we've seen that's been driving the economy.
Right.
If that starts to pull back,
That could be a problem.
that could be a big problem.
Yeah.
And the data seems to support those concerns.
Mhm.
The Wall Street Journal also highlighted that inflation-adjusted household credit card debt has now surpassed $10,000
Wow.
for the first time since 2009.
That's a big number.
That is a big number.
Yeah.
And it really suggests that, maybe those pandemic-era savings and government stimulus
Right.
that was fueling a lot of that spending, maybe that's starting to dry up.
Yeah, people are having to rely more on credit.
Yeah, and it's not just, lower-income consumers who might be feeling the pinch.
Right.
The Wall Street Journal had a really interesting data point about late payments,
Yeah.
and they were saying that the rate of late payments is actually increasing among higher-income consumers.
Yeah, which is kind of surprising.
It is surprising. You would think that those
Yeah.
folks would have a little bit more of a buffer.
Right, more of a cushion.
Yeah.
But it seems like even they're feeling the squeeze.
So maybe that overall picture of household balance sheets being healthy,
Right.
maybe it's masking some of these underlying challenges.
Yeah, the averages don't always tell the whole story.
Yeah, and I think, it's not just about the hard data. It's also about sentiment.
Right.
How are people feeling about the future?
Absolutely.
And that can have a real impact on their spending habits.
Yeah, if you're worried about losing your job,
Right.
you're going to be less likely to go out and buy a new car
Exactly.
or a new house.
So even if the data looks okay,
Right.
if people are feeling uncertain,
Yeah.
that can have a real impact.
It can definitely slow things down.
Yeah, and the Federal Reserve, they did a survey,
Uh-huh.
and they found that consumers' perceived likelihood of missing a minimum debt payment
Right?
in the next 3 months is at its highest level since April 2020.
Wow. So people are worried.
Yeah, they're definitely worried about the future,
Yeah.
and that's not a good sign.
No, it's not.
Now, before we wrap up, there were a few other headlines that I think are worth mentioning.
Yeah.
One of them was this huge $23 billion deal by BlackRock
Oh, yeah.
to acquire over 40 ports globally.
That's a lot of ports.
That is a lot of ports.
Yeah.
And this deal includes key facilities at both ends of the Panama Canal.
Yeah, this is a big one.
This is a big deal.
And it's interesting because there seems to be a political angle to it.
Oh, really?
Yeah. The Wall Street Journal was reporting that Trump's rhetoric about potentially taking back control of the Panama Canal is believed to have spurred these discussions.
Oh, wow.
Yeah. So it seems like politics and finance are definitely intertwined here.
Yeah, it's all connected.
Yeah.
And then we had the earnings report from Oracle,
Yeah.
which was a bit of a mixed bag.
Yeah. MarketWatch was covering this. Their revenue actually fell short of analysts' expectations,
Okay.
which caused their stock price to drop after hours.
Yeah.
But they did report a record order backlog
Okay.
of $130 billion.
Wow, that's a lot.
And they also highlighted some big new cloud deals
Okay.
with companies like OpenAI and Meta.
So some good news, some bad news.
Yeah, investors seem to be more focused on the short-term revenue miss
Yeah.
than the long-term potential.
Which makes sense.
Yeah, they want to see results now.
And then we had some news out of India
Yeah.
with the electric vehicle maker Ather Energy.
Mm-hmm.
And they're reportedly considering an IPO,
Yeah.
but at a lower valuation than they had initially hoped for.
Yeah, it seems like demand for electric scooters in India might be cooling off a little bit.
Which is interesting because, we think about the EV market
Right.
as this, huge growth area.
Yeah.
But even there,
Yeah.
there are some challenges.
There are bumps in the road,
Yeah.
for sure.
And then finally, we had the European Union.
Yeah,
They had a very successful bond sale.
that's right.
And this comes at a time when the EU is considering increasing its defense spending.
Uh-huh.
So it seems like investors have confidence in the EU's financial stability.
Yeah, they're willing to lend them money.
Yeah, and it just shows how geopolitical events can really impact the markets.
Yeah, for sure.
So to sum it all up, we've got a U.S. stock market that's facing a lot of uncertainty,
Yep.
driven by recession, fears, inflation concerns,
Right.
the potential impact of future policy decisions.
And all of that uncertainty is leading to a shift in investor appetite towards international markets.
Like Canada and China.
Exactly.
And some strategists are even favoring European equities.
Yeah.
And then underlying all of this is this big question about the American consumer.
Right.
How strong are they?
Yeah.
Are they going to be able to keep spending?
Are they tapped out?
Yeah. Are they tapped out?
Or is there still some room to run?
Yeah, this has been a really fascinating deep dive into the major financial magazine headlines.
Yeah, we covered a lot of ground.
We drew primarily from the Wall Street Journal and Bloomberg News this morning.
Two great sources.
Two great sources.
As always.
And, as we kind of wrap up here,
Yeah.
I think the big question that we're left with is how are these trends going to impact your individual investment strategies?
Yeah.
What should you be paying attention to?
What are the things to watch?
What are the big trends
Exactly.
that are going to shape the market?
Yeah, what's going to move the needle?
And the economy in the months ahead?
What are the things that are going to keep you up at night?
Yeah, I think that's a great question for all of our listeners to be thinking about.
Absolutely.
And we will be back tomorrow morning
Bright and early.
with more headlines from the major financial magazines.
All right, sounds good.
See you, Matt.
See you tomorrow.